Yo, what is up, guys? It is Tom. I know I've been away for a while, but I've been super busy. As you guys know, I'm working with a fintech hedge fund. I've been doing a lot of research, so it's been tough for me, working my full time job and consulting for this hedge fund. But now I'm back. I'm gonna try to start doing videos as much as I can. But first, I want to point out something. If you guys want to go check out on Forbes, this is the fund manager I work for. I'm actually writing some articles that are published in Forbes. Um, some of them, not this one or this one, but this one I wrote. Let's see, and a couple more. So yeah, if you guys want to check it out, I'll leave the link in the description. This one I wrote, and this one I wrote as well. If you guys want to check that out, link will be in the description, and I'll have more information about the hedge fund I'm working with later on down the road. Also, they set me up to be a columnist for Seeking Alpha, so I'll be writing some of my own stuff that'll be published under me. So that'll be really exciting. But guys, today I want to talk about pension funds for a second, and the reason why I want to talk about pension funds is because I was in Penn Station. I picked up a copy of Barron's investment newspaper, and I came across an article titled "Pensions and Politics Don't Mix." And pretty much the whole sentiment of the article was that pension funds are at an incredible deficit, almost $1.4 trillion as of 2016. For those of you who don't know, if you want to do some more research into the United States pension crisis, definitely do that because it's pretty much a blatant Ponzi scheme, along with Social Security and a lot of other government-funded entities out there. Obviously, I know that there's private pensions as well, but it's all in the same crisis, and it's all eventually going to come down. And this got me thinking that since pension funds are at such a deficit at $1.4 trillion, why don't some of their investments transfer over to the cryptocurrency market where they could potentially see higher returns for their clients and potentially make up for that deficit? Now, the reason why I got into this is because title of the article is Pensions and Politics Don't Mix. And the sentiment of the article, it pretty much says that politicians are pretty much saying that they do not want pension funds to invest in non-renewable energies, whether that be oil, whether that be coal, and other certain equities like gun manufacturing stocks, to just be politically correct and environmentally conscious, which I get, I understand that. But also, on the other hand, you have to understand that a pension fund manager's responsibility is to make money for the pension fund so they can afford to pay out over the long period of time. And what we're seeing now is, since there's such a deficit in the amount of pensions, you're seeing deferred payments, and more pensions are requiring more and more money to be paid in of the employee. So it's pretty much a blatant Ponzi scheme where you pay into something for your entire life, and it will most likely not be there when you retire. So I want to go through this article, and I think it would be very positive for Bitcoin and cryptocurrencies if we saw some of this money from the pension funds kind of shifting to Bitcoin and cryptocurrency, because it is a huge market, guys. So the largest 300 pension funds collectively hold about $6 trillion in assets. That is huge. Imagine if we could just get 2 or 3 or 4% of that 6 trillion to be allocated by these pension funds into Bitcoin. Guys, that would be some serious gains. So going back to this article, it says, while the U.S. stock market has produced one of the longest and strongest bull runs in its history over the past 9 years, the financial condition of many of the country's 6,000 or so state and municipal pension funds have deteriorated. Some are in bad shape. Yet even as these pension funds grapple with a huge deficit of $1.4 trillion as of 2016, the drumbeat for exiting investments in certain industries such as oil, coal, and arms, even car companies, goes on. Should pensions, particularly underfunded ones, make investment decisions based on political interests, or rather than follow the standard of a fiduciary duty to make the best returns as possible with the least amount of risk? So, what we're seeing is we're seeing politics enter the pension fund space saying, hey, look, we don't want you to invest in renewable energy, in non-renewable energy such as oil. And that's going to take a real chunk out of these pensions because, as you guys know, I live in New York and oil, the price of gas is going up. Imagine if pension funds, are allowed and are encouraged to continue to invest into these assets, right? And then maybe there's the argument there that, hey, listen, maybe we should move away from, dirty energy such as oil and coal, which I agree with, but there needs to be a new sector of investment. And that's why I say that if you want to keep this Ponzi scheme going and, at the expense of the people, because, there's a lot of hardworking firemen, there's a lot of hardworking police officers that have paid into these pensions over the years, and there's a good chance they will not collect their pensions when they come to retire. So I found this article on Bloomberg, and it was funny because this is where I live. I live in Nassau County, and Nassau County is absolutely broke, but everybody that works for the state government or the local government, the county government, I should say, makes mad money. And that's why their budget isn't balanced. That's why this isn't sustainable, because they pay their police officers, they pay people who pick up trash in the freaking park hundreds of thousands of dollars a year. So if you look at this, it says the country the county whose almost 2,400 police officers were paid an average of about 149 grand in 2016 and 2017, according to the Empire Center for Public Policy, has also deferred pension payments, racking up 210 million billed to the state. All of the county's major union contracts have expired and must be renegotiated. Guys, this is not good. And this really hits home because it really shows that if you are not diligent in your spending and you just hand out money, things are going to come crumbling down. I'll give you an example. My dad's friend, he's a retired police officer in Nassau County. His pension is 90 grand a year for the rest of his life. Like, how is that sustainable? Times all the police officers that retired when, they were my dad's age, 55, it's 20 and done here in Nassau County. That is absolutely ridiculous. So there needs to be another asset class to reboost this growth in pension activity because it is just absolutely not sustainable. And if you're going to have government intervention saying, oh, this pension fund can't invest in oil, this pension fund can't invest into coal, this pension fund cannot invest into gun manufacturing stocks. Well, where's the money going to come from? The money needs to come from somewhere. And what better place for us to ramp up these gains in these pension funds to hopefully save these people from getting screwed out of their money? I would say it's the cryptocurrency market. And I think this would be huge and mainly positive for Bitcoin and cryptocurrencies all around because there needs to be an alternative asset class that these pension funds can invest in order to leverage higher returns for their retirees, all these people that are going to retire. And granted, I understand cryptocurrencies is a very new market. It's a very speculative market. But at this point, it's almost they don't even have a choice because this whole thing is going to come crumbling down sooner or later. Pension funds are a scam. Most pensions are a scam. It's a blatant Ponzi scheme. But I was talking to one of my friends about this, and they're like, Ponzi schemes are only acceptable when they're started by the government. Plain and simple. Everybody will get all up in arms about BitConnect. Everybody will get all up in arms about, Bernie Madoff. But they don't understand that Social Security, biggest Ponzi scheme that I'm paying into myself. I'm paying into Social Security every single paycheck. And I guarantee studies and statistics prove that Social Security, there's a good chance of it not being around when I retire. So if we could just get a chunk, guys, just a chunk of this $6 trillion in assets into the cryptocurrency market and into Bitcoin, I'm pretty sure there's a high chance of probability that we could see a $50,000 Bitcoin within 2 years. Now, granted, in my previous videos, I have said that I believe that Bitcoin, I don't think we're out of the woods yet, but I'm a very conservative investor. And look, I'm not concerned about being right. I don't care about being right. I just want to be successful. And that's why I allocate my portfolio in a structured way it gives me the highest chance of winning. That being said, I wanted to pull up this article about Forbes. It says cryptocurrency not in pension funds, shopping carts, their managers tell why. And this was interesting because when I was reading the article in Barron's, it didn't have any mention about cryptocurrencies, how pension funds should get into cryptocurrencies. The only thing it said at the end of the article is that there needs to be another alternative asset class or another alternative way in order for these pension funds to make up their deficits. And automatically what popped in my head was cryptocurrencies and Bitcoin. It's just like a given. But judging by this article, which was a little bit surprising to me, there's actually pension fund managers out there that are calling Bitcoin and other cryptocurrencies a fraud, which is interesting to me because if you look at the whole ramifications and in the meta game of what pension funds are, they are textbook Ponzi schemes. I'm paying into something in hopes of a return down the road. But the problem that we're seeing now is there's not enough people paying into these pension funds and we're paying out too much money. So there's going to come a time where the equilibrium busts and it's all going to come crashing down like a house of cards. But Bitcoin and cryptocurrencies could be the savior. Hey, it could be a speculative gamble, but at this point, you just don't have a choice. So going into this article, I wanted to point out one excerpt in here that was pretty ridiculous to me. Let's see, I gotta find it here, guys. But the lady called, or the manager here called cryptocurrencies fraudulent, which I was like, well, that's weird because you guys are managing a fraudulent fund. And I mean, I guess it's terrible to say that outright, but just the ramifications of it are terrible. Let's see what it says here. It says, pension funds tend to be slow at investing in new asset classes, says Carly Wooten, director of the IUE CWA pension fund. And I believe I used to be under this union, CWA, Communications Workers of America, and it was a complete shamble. We had to renew our contract. It wasn't getting renewed due to some of these issues. So it says, who says she finds cryptocurrencies too risky? Well, Carrie, don't you think it's very risky about having a $1.4 trillion deficit in all the pension funds across the United States? I think that's pretty risky. So it says, as a rule, the pension fund trade group executive said his members are avoiding Bitcoin and other forms of cryptocurrency-based digital currencies or currency because digital currencies are highly speculative and fraught with fraud. Guys, I mean, to me, that's just not a valid argument. If you're just saying, oh, obviously there's going to be some bad actors in every asset class, right? A lot of penny stocks are frauds. Obviously, I've preached this. A lot of altcoins will go to zero. But I think it would be a very good look on the part of the pension funds and pension fund managers to get into Bitcoin, to get into cryptocurrencies, and start investing maybe in some of the top platform plays. You know, you have OneChain, you have ICX, you have Ethereum, right? You have VeChain. These, and judging by the overall market cap of cryptocurrencies, as of now, we are at 455 billion, 581 million, $48,927. That is a very small market cap. So imagine if these big institutions, these pension funds can get into cryptocurrencies early, I think they have a chance of survival. So let me know what you guys think. I know this was kind of like a podcast style rant, but I was just reading this in Penn Station, headed home to Long Island, and I was just thinking about all this stuff, and I really truly believe, I don't buy it, that pension funds aren't looking into cryptocurrencies. So it'll benefit you and I is that if we are in early, if we continue to stay diligent, continue to manage our risk, once the herd comes, once Wall Street comes in, Goldman Sachs is setting up a trading desk, and they specifically said about last year that they're not going to do that. Lloyd Blankfein obviously is a liar. They want into cryptocurrencies. This is a way for them to make money. Wall Street always will make money. Hey, could there be one last shakeout to 3,000? You know what? I mean, I'm leaving everything on the table, but there's one thing for sure is that I will not leave cryptocurrencies. I'll allocate my risk accordingly. And I truly believe, guys, that within a year or two, we'll be seeing a $50,000 Bitcoin. So let me know what you guys think. Should pension funds be getting involved into Bitcoin and cryptocurrencies to help sustain their Ponzi scheme? Let me know. I'll also leave a link in the description below to a Facebook group that's ran by my friend Edward Ornelas. He is a Millionaire Cryptocurrency Trader. We always give a little bits of like tips and tricks and things in that Facebook group. So let me know what you guys think. Subscribe if you are new, and let me know what you think about this pension fund crisis. Until next time.